Hi guys, it's Martina Dechevska with the Empire team at Spire Group. Happy Cinco de Mayo for the ones of you celebrating. I'm actually using the quarantine time to step up my Spanish game, and I have been studying Spanish for the past month. Anyway, we have Tony Zhao here, and today we're going to be talking about mortgages and COVID-19. So let me get Tony here. He's a great lender, somebody I work with a lot. Um, let's see. Tony, hi.
Hey, Martina, how are you?
I'm good. Do you hear me?
Yes, I can hear you well. How about you could hear me, right?
Yes, I hear you, and thank you so much for joining me today and my audience to talk about such a hot topic, which is mortgages during COVID-19. So I'll start with the first question, which a lot of people are wondering right now. As you probably know, a lot of people are worried that the banks might stop lending. And tell me, are they still lending? Are you guys still lending? Is there any risk?
So it really depends on the bank right now. I do think that there is substantial risk. As of, I think, last week, you have almost 7 million mortgage holders that are currently trying to go into a payment deferment. Okay, that's a good percentage of the overall mortgage holders in the United States. Now, a bank makes its money by lending. So if you have a lot of commercial loans, right, which is, corporations, retail, if they can't pay the banks back, then the banks really have very limited ability to start lending that money. So you have seen a lot of large banks actually retract. Some banks are saying we need a 720 credit score. There's big banks saying that we will only do mortgages if you have $250,000 with us at the bank. Some lenders are saying we won't do less than 25% down. And I think as time goes on, there's going to be a lot more retraction in the lending business world because as people start defaulting on their commercial mortgages, residential mortgages, every bank has a risk department that's going to assume the risk and what's going on. So I do believe that there's going to be a lot of banks that's going to retract on lending. As of now, Investors Bank have not retracted anything. We're still doing 5 or 10% down lending. So on the New York City front, we've not seen that yet, but you could start seeing that across the board.
Okay, but for now, because I know you guys are a little more flexible than the traditional banks, you guys are still lending. So that's good to know.
Where
What about the rates? And are rates still going down? Are they still hovering around 3.25 for a 30-year fixed? If you can talk a little bit about that.
So there's two types of loans, right? One type of loan is called a Fannie Mae and Freddie Mac loan. Most loan amounts under 510,500 are purchased in the aftermarket or they're insured by Fannie Mae and Freddie Mac. So those loans are going to be in a 3% area on a 30-year fixed because it
Okay.
provides liquidity for the bank. When a bank does a loan, Fannie Mae and Freddie Mac will buy it, they'll insure it, and that makes it a lot, I guess, more liquid for the banks to do it because they're not locking up their own money. On a portfolio side, meaning the bank cannot sell the loan, they have to carry it on its balance sheet. The rate stays steady somewhere between 3.25 to 3.5, depending on your financial picture. So I do
And
think for the foreseeable future, rates are going to remain low because remember, Martina, interest rates are based on geopolitical and economic events. And I think that's going to cause a lot of turbulence in the market, but I do believe rates are going to sustain and be low.
okay, well, that's good to know. And how about refinancing? We saw a big wave of refinancing due to these low interest rates in the beginning of the year. Is that still going strong with COVID-19?
Absolutely. I think, I've been doing this for almost 18 years, and I would say almost every client I've ever done a purchase for has reached out to me, has sent friends and family to me about a refinance. Our business in New York City, at least with my team that I run, we were probably about 10 to 20% refinances. Right now, we're 90% refinances with about 5 to 6 times the volume and the business that we're typically used to. So it's been very chaotic. People are very overwhelmed, and things are certainly changed in the market that as we know it.
How about appraisals? Are you guys still doing appraisals? And I heard about drive-by appraisals, but they're more like suitable for, investment properties. What about the usual co-op or a condo sale?
So on Fannie Mae loans, if you recall, there's two avenues that a mortgage can stay with, right? The first avenue is a Fannie Mae Freddie Mac loan. The Fannie Mae Freddie Mac loan are purchased by the government afterwards. Those loans, they require full appraisals, which unfortunately requires the appraiser to physically enter the property and take interior photos. On a purchase, it's extremely important because you have a lot of discrepancies with square footage on a unit. So the appraiser usually is the third party that confirms the square footage. And that's what we're seeing a lot of issue with on a purchase side is if a listing agent is listing the property at a certain square footage, the buyers and their attorneys and the buyers want to confirm that the square footage is accurate based on the listing because you're paying by the square foot. So on a Fannie Mae Freddie Mac side, full appraisals are required, meaning interior photos, the appraiser walking into the property. On a portfolio side, which is a large chunk of our business, we're doing drive-by appraisals. So in a condo co-op, the appraiser simply drives by the apartment. They take a few pictures of the property, and then they work with the listing agent, or they'll actually work with the consumer that lives in the property and say, hey, can you text me some photos of the property itself so that we can enter it into the appraisal report. I don't know if you've ever seen it. I'm sure you have seen your own appraisal report. They're about 50, 60 pages. So it's extremely detailed, and every piece of information are required. Otherwise, the appraisal cannot be completed. So it's an integral part of the process, and without it, we're kind of stuck.
Got it. And how about multifamily financing? You know that I actually passed you one of my contacts who's a multifamily investor, and I know that they're facing a bit of an issue right now. They were already hit by the new rent laws that were rolled out last year, and that was kind of like another big hit on them. Can you talk a little bit about that?
Experience as myself because I do own a lot of investment properties and multifamily. So it really depends on the individual. Now, on the banking side, they probably have retracted or really slowed down on the commercial lending division. Now, this may not be for all banks. This could be for some banks. It's not very specific. But if you have tenants that are not paying you, right, and your income depends or your rent roll depends on that retail store being opened, unless it's a restaurant or deli or something of that nature that depends on carry out, you probably are asking for your landlord for some type of deferment on the rent, deferment on paying anything. So that's going to cause a cyclical effect because it's a trickle down effect. If your tenants can't pay you and you don't have the ability to pay your mortgage unless you have a great cash flow, or if you're getting a lot of government funding right now, it's going to be difficult for you to pay those loans back. So we are starting to see a lot of those issues. And I foresee that in the upcoming months, there are going to be some retractions on the lending side for commercial lending. I think less on the residential lending, because remember, on the residential side, everybody needs a home more than ever these days, right? And especially if you have a lot of offices where they're thinking about converting into possible work at home, right? You don't ever have to come into the office. So you're going to see probably a tsunami of that where folks or corporations are trying to break their leases. Employers are going to give incentives since they're not having to pay rent to their employees to say, hey, we'll give you a little more of a stipend or even some allowance for you to work at home and deal with childcare and things of that nature. So I think you're going to see a huge economic effect. You're going to have a lot of business models that's going to be changing, that's going to be geared towards, stay at home and working, home worker, office space. And I do believe, and look, this is my personal opinion, that it could have a really detrimental effect to the commercial world.
Yes, yes, it really is a concern, and prices have been going down a lot, especially on rent
Yeah.
on multifamily with rent stabilized units. Um, so let me ask you, what does the consumer, or let's say the first time home buyer, or a buyer who's even seasoned, need to know right now for buying in COVID-19 times, through a mortgage perspective? What do you think is most important for them to know?
Well, I think it's extremely important for you to get your ducks in a row, right? To have your pre-approval handy. Now, lending in the residential world has never really changed because remember, we as loan officers rarely met with clients. It is a complete, what we did was everything was virtual. We met with clients virtually. We would get documents, virtually sent in an email. Pre-approvals were sent in emails. I don't think I met with clients really on a very rare basis when they said, hey, I really must meet with you and look at you eye to eye. Otherwise, everything was done virtually, as you and I have seen
Yeah, and we've been doing it like that
for
together as
years.
well. So it's my
So
preferred
I,
way.
yeah, so I think it's really going to change the economics and the business model on lending and making it more virtual. I think everything's going to become virtual. Right now, we have closings that are virtual, due diligence that are virtual. I don't think anything has to really be done in person. I think you're going to see a lot of issues, or I think transparencies or just transformations on board packages. An attorney, when they look into a co-op, they really must review the board minutes, right? You're going to have some issues with that because a lot of boards don't want to release their board minutes just to anybody. So back in
Yeah.
the days, the attorney would literally go into the management office, set up a time and say, hey, you have 30 minutes to review our board minutes, for your due diligence. I think that's going to change. And that's really a hurdle right now for a lot of attorneys that are vetting co-ops. But on the bank end, everything has already, was virtual, and I think it's going to remain that way and be sustainable that way.
So you feel that people should feel confident about financing or refinancing still their home, and you believe that what is your projection on the market? Just as a wrap up question, do you think that things are going to be, there has been a little bit of retractions, but now there is a new wave of buyers on the market that I've been talking with every day. Some of them were looking a year ago, year and a half ago. Now they see the opportunity in this market. Do you see that from your perspective too, or you think
I
that things are going to slow down?
So we've had a record number of pre-approvals, and I'll tell you why. So myself and my family, we're stuck, out east, but you have a lot of people stuck in tiny little apartments, right? And
Yeah.
in the past, they had the ability to just manage because your kid was in daycare, they were in school, the family had dinner at night, whatever the case may be. You spent very few hours collectively at home. With the new wave of working at home coming down the pipe, I think people are just going to be fed up. They're going to think of ways to either move to the suburbs or upgrade to a larger home. And I think that's really going to transform and really revitalize the real estate market in New York City. I think people are going to want out of their homes. And I think it's extremely important that, you as a buyer get pre-approved. And nobody buys a home in New York City or anywhere else because they think they're going to make 20, 30% on their investment or treat it as an investment. People should buy a home because it's your largest tax deduction. I'll give you an example. So let's say your mortgage interest is $3,000 a month, right? Under 750,000. Depending on your tax bracket, depending on who you are and your filing, you can actually write off almost a third of your mortgage payment. So your after-tax mortgage carrying cost is only $2,000 a month. And if you compare paying $2,000, $3,000 a month over 10, 15, 30 years, you're talking about 6 to 7 figures. So purchasing a home, in my opinion, will still be very vital, if not more important, prior to the pandemic. Prior to the pandemic, people could just, make do. Right now, people cannot make do. You just cannot be stuck in this tiny little apartment. People are going to want to upgrade. So we've seen a large percentage of pre-approvals happening, and people are going to want to buy after this. And that's my opinion.
Excellent. Well, thank you so much, Tony. That was very insightful. Tony Zhao with Investors Bank, and I'm sure we'll talk soon again, as always.
Thank you so much.
You're
Be
welcome.
well.
Bye, Tony. Thanks.
Bye.